The following is a presentation of TFNN.
This story began on a nice Florida winter day, December 10th, 2005, when lone fishermen in Mosquito Lagoon, out near Cape Canaveral, discovered a crab trap that appeared to have something caught inside of it. As the fisherman looked closer, he noticed that a baby dolphin was tangled in a rope that had cut off the supply of blood to the dolphin's tail. The fisherman cut the rope and called for help because he saw this dolphin was struggling. The dolphin, later named Winter, was brought to the Clearwater Marine Aquarium, but too much damage was done to her tail, and it could not be saved. Now, folks, the greatest gift you can give anyone is the gift of your attention. And that is exactly what Winter received from a group of prosthetic engineers who created an innovative new design for a prosthetic tail. Winter, she's doing just fine, and her story of survival and success has gone on to touch others, many, many others. These are folks that need a more flexible prosthetic. We can't control the circumstances of life, folks, only how we respond to them. Circumstances are like the wind. Learn to set a good sail, folks, and let the wind take you to your dreams, your treasures, and your destination. Welcome to TFNN. We're glad you're here and you have our attention.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the July 26th fantastic Friday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, and I absolutely, folks, I mean absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that truly is what it's all about. So let's go have an inspiring weekend. Let's take a look at one of our tools. This is the tool I call a soul without high aim is like a ship without a rudder. You know, a ship with a properly trimmed sail can travel in any direction in relation to the wind except directly into the wind. While the set of the sail determines the most efficient use of that wind, the rudder enables the ship to travel in a specific heading. Without a rudder, the ship can do little more than just simply blow aimlessly downwind. Now, what is true of a sailboat is also true for you and I. There are many things that can contribute to our success. Maybe it's your charming personality or your dynamic appearance, or maybe it's your fantastic education. However, those things are like setting a sail without a rudder, our steering device. You know, and if we do that, we're just simply not going to get to our destination. We all need a purpose. We all need a goal, an outcome to steer us in the direction of our choice, the direction of your unlimited potential. So my question is, where is your rudder pointed right now? You know, it's always good to keep your eyes open for new ideas. You know, new ideas, they're around us all the time. They always have been. They always will be. Have you heard of the Montgolfier brothers? A couple of brothers from France that invented the hot air balloon. One night, Joseph watched as burnt paper scraps rose above the flames in the fireplace and moved up the chimney. It was then when he realized that hot air could make a balloon rise from the earth. You know, there are a lot of great stories associated with these brothers, like who the first living beings were that flew in that hot air balloon. King Louis XVI of France, he wanted to send up convicts for the first test of flight, but instead he decided to send up a sheep, a duck, and a rooster. Pretty amazing. How about Samuel Colt? Samuel Colt got the idea for the revolving cylinder for his revolver as a 16-year-old seaman watching the helmsman turn the ship's wheel, each spoke aligning with the clutch that held it fast. Alistair Pilkington, he noticed a film of fat floating in his wife's dishwasher. That idea inspired the process of taking molten glass and floating it on a layer of melted metal to provide an otherwise unachievable smoothness. It pays to be observant while reaching for your vision. At last night's workshop, From Nowhere to Now Here, I was able to share a new idea, something that's been around us. It just simply took a little while for my eyes to actually open up to it, and I enjoyed teaching it. Folks, always remember this. A soul without a high aim is like a ship without a rudder. Make sure you have a goal. And you know what? Better than a goal, make sure that you've got a purpose and an outcome. Make sure it's a strong purpose and a strong outcome. Then set your sails and keep your eyes open along the journey of life. You never know what just might show up. Let's go check out and see what's showing up here in the markets right now. We've got the Dow futures off 81 points. Almost seems like a replay of yesterday morning. ES Mini down 9 points right now at 1675. NASDAQ futures off about 10 points at 3040. Russell 2000 down about 8 at 1043. King dollar back 18 ticks right now. Quite a bit of movement in the Japanese yen. We'll take a look at that currency pair. Otherwise flat in the euro and the pound as we speak. Gold pulling back a bit, down $5 at 13.23. Silver off 21 cents, off 1% this morning. Trading out at 19.99. Light sweet crude, it is backing off. May give us the shot for either the long or the short side on it. It's traveling out at 104.86. Natural gas back a bit. Let's take a peek around the globe, see what we've got going on out here. Asia last night, a little bit of a bloodbath over in Japan. The Nikkei down 432 points. That was off 3%. We'll take a look at that stock chart. Over in Europe right now, you've got the DAX off 0.7%, down 58 points. The FTSE off 0.5%. That's down 35. Trading out at 65.52. Our call-in number, and I'd love to hear from you, 877-927-6648. Give us a call. Let's go start off by taking a look at, now this one is a beautiful thing. If you are watching us on TigerTV, what you are seeing is the Russell 2000 futures contract. If you're just listening on the radio or your mobile device at TFNN.mobi, thank you so much for doing that. Remember, you can get the live stream of this show. Just simply go to the homepage of TFNN.com. Over on the upper right-hand side, you'll see a box, 3 little smartphones in it, or smart devices. Click on that. The show streams live, and you can always get the archive on Channel 9. Now, this is a pattern. It's a 3 drive to a top pattern that we drew in here. I drew this in, I'm going to guess, around July 11th. Sometime around July 11th, 7-11 out there, I drew in this pattern. This is a leading indicator pattern that is out here. And I know that we took a look at it for sure on July 18th. Because when you take a look at a 3 drive to a top, 3 drive to a bottom pattern, what you don't want to do is force the issue out here. And by forcing the issue, you like to have total symmetry. And total symmetry on this pattern means you're looking for both time and Fibonacci expansion symmetry. Symmetry of each of the drives up. Well, if you take a look at time, we knew what the time sequence was because our first candle, our first drive, was on March 15th. Our second drive took place on none other than May 22nd out there. That set up a 46-day, a 46-period move. That meant that we already knew that July 26 was going to equal in time. I mean, equal to the day. And what was concerning me was, boy, this 3 drive to a pattern was finishing up early, with this being the lead dog, meaning the Russell 2000 in the clubhouse and having gotten up to the 1052 area, which was also the completion of an A to B equals CD pattern out there. How was it that it was just simply going to travel sideways for, 2, 4, 5, 6 days? Well, by gosh, it absolutely did it. The amazing thing is it absolutely did. Now, here's the cool thing about this pattern. Right now, if you take a look at yesterday's candle, we'll do that. That's kind of behind the yellow area here. Yesterday's candle, the open is 1044. Right now, we're trading out at 1043.80. You close below 1044, and guess what we've got? We've got a bearish engulfing candle that has formed today. After a 3 drive to a top pattern. Textbooks. We would have to actually create a textbook today and put this one in here. That's if this, well, actually, it doesn't matter which way this pattern goes, because if it works, this is a 3 drive, very bearish pattern out here on the lead dog in the clubhouse. That is important. You don't have to play this to the short side because it has been the strong index. You want to take a look at weakness when you short, not really strength out there. You could, but you want to take a look at, you're looking for signals from strength, not necessarily, you want to go long, strong, and you want to go, weak, meek, something like that. And in this case here, you're getting a huge signal. Now, we got to see how the market plays out today out here. But if you do get a close below 1044, then what you ought to do is back up the trucks. Well, what you really ought to do is make sure you tighten up your stops if you are long. Now, here's the cool thing about this pattern. if this pattern fails, and I don't necessarily mean today, at any point in time, let's say over the course of the next week, if this pattern fails, because this is such a reversal pattern, because it was patient enough to wait, because it knew that Stevie had drawn in the 3 drive and that we were looking at July 26, and so it was patient enough to go ahead and draw it and wait and form this pattern out here for us. If this pattern fails, then go ahead and back up your truck and buy all the TNA you possibly. In fact, go ahead and back up your neighbor's truck and buy TNA for him as well. That's a triple 300% of the Russell 2000, because if this pattern fails, this tells you right now that there is strong momentum to the upside. That is the beauty of this pattern, because the back is up against the wall and you can trade it in either direction. I don't suggest trading this one to the short side because there's other weaker things that are in the marketplace. But very cool for us to be able to start off with this 3 drive to a pattern. Those of you that have been listening in know that we have been looking at this 3 drive, and very cool that it actually ended up waiting. And that's the good news, is both from the bullish and the bearish side, because you wanted this pattern to go ahead and show up. Because, like I say, if it fails, it means strong momentum to the upside. And if this works, it says, you know what? The beginning of the correction. And if we take a look at the Russell 2000, what that says to us, I've gone ahead here and I've pulled this back. This is a futures contract, but at least that way we know what's going on right here in the market. If you go back to the October 3rd, 2011 swing point, you can see the rising price channel that it's traveling in. And should price move back, if you take a look at where it would move back to, certainly you've got the bottom of the price channel. That would be a beautiful move out there. I don't know that that will or will not happen. It could, but if it does happen, that would be a nice trade out there. Right now, it looks like where it would pull back to is the 1013, and 1013 is going to take you right to the top of May 22nd. That actual number is 1008. So let's assume this pattern here does work out. That's where you're going to get the next piece of information inside the Russell 2000 contract. You get below that, then that brings in place this rising price channel. Most certainly 986, because that would be nothing more than the sweet 618 retracement out there. Now, the market is trading lower. Don't start backing up your trucks right now and trying to go short, because you need to understand the EKG of the marketplace. That EKG is none other than the relative strength indicator and our 30-minute chart out here. If we take a look, we'll go take a look at the ES Mini right now. What we can see here is this formed a Gartley sell. I was looking for it to get up to 1690. Guess what? It got up to 1689 out there. It formed a Gartley sell pattern. That, folks, then what it did is it's moved lower and it's done a 0.786 retracement. And it's doing that from where? It's doing that from the oversold condition. The bears here showed up at about 7 o'clock this morning, and they got trampled on at that 7:30 candle. Again, we're looking at a 30-minute chart out here. You can see the bears here trying to step in right now. Do I suggest that you step in? No, you got to wait for bullish confirmation out here, and we do not have that at the moment. But you can see the market coming from a oversold condition. Let the market bounce if it's going to bounce, and then you would go ahead and take a look at selling it. That's if you are on the short side of the market. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. A service that I like to use, I guess just kind of a creature of habit out there, Expedia. Well, Expedia is just simply getting dumped upon this morning. Right now, it's trading down 22%. Last trade firing off at $50.70. This closed at $65 last night. That is one hammering. So where's it trading down into? Well, if we take a look at the this thing had a nice breakout here. Volume on that breakout was 17 million shares on July the 27th, 2012. So a year ago. 17 million shares. And if we take a look at now, whoops, I didn't mean to do that here. As that broke out, price moved back, never filled the gap out here, but the bottom that it's made, inside the gap is $50.47. So that is from August 31st, 2012. That had about 2.9 million shares. Came back and tested that again with 6 million shares on October 25th. So that's an area of strong support. That low was 50.71. Again, the last trade here just fired off at 50.60. So looks to me like what this thing is going to do is move all the way back down and test out the very first sign of strength here, which was, I won't say first, the last real sign of strength is what let's take this back here. There was a sign of strength recently back in October of 2012. That had 13 million shares, so that was what looks like on my screen here, a third gap. But that was not a three-gap play because that gap here was smaller, quite frankly, than the first two. So where it is moving back into is that sign of strength this morning off of July 26th. If that area fails, which would mean, when I say fail, if you get a close below I'd say below below the candle of July 26, that number is 43.56. Where it will move back to is a little bit larger sign of strength out here. That'll take you all the way back into April 27th of 2012. But how's that for a trip here? In one day, this is going to take back and get all the way back to July 27th, 2012. 1 full year's worth of price movement in one single day. It's why you want to make sure, no matter what it is that you are trading, this is the whole reason that I got into technical trading, because it was the most fundamental thing once you finally figured it out. Once somebody taught me, and so once I taught myself what the markets were going to do, and when they do fall out of bed, where they fall back down to are your high volume bars out there. And so you always want to make sure that you know where those bars are. And you want to always make sure that you are looking for some type of institutional selling. Well, I think in Expedia, we're certainly going to see that this morning here. Also getting the wind knocked out of it is Solar Winds. SWI is their ticker symbol. They are trading down 21% as well. That last trade firing off at 36.50. 36.50, holy schmoly. It's going to take you down below the June 24th. In this case here, it's June 25th. That low is 37.96. This thing is really, this was one of those high flyers inside the IBD. No longer going to be flying high out here. Well, it's flying high to the flying low to the downside. So let's put this thing on a weekly time frame here. Try to figure out where this is headed to. Solar Winds now, it's going to take out a weekly swing point, or should take out a weekly swing point, at least the way that it's trading here in the pre-market, and that's at June 28, 2013, 37.96. That would set up one heck of an A to B equals CD down. Now, where's the high volume bar on this? The high volume bar is from February 10th. Well, one of the high volume bars is February 10th, 2012. And the top of that is $37.79. So that is most certainly where it is, it's trading at 36.50. I suppose that's a foregone conclusion that's going to trade there. The low of that is 33.04. If that, in fact, fails, your next high volume bar, real high volume bar in this equity, and it's a real shame, is all the way back down to July 23rd, 2010, around $12 to $17 and change out there. So that is on Solar Wind, truly getting the wind just knocked out of it. Zynga is down 16%. Let's take a look at something here, moving to the upside. For those of you Java junkies out there, Starbucks. You've got Starbucks up 6.5% this morning. Ticker symbol SBUX out here. Looks like that is going to go ahead and take on its swing point high, this little doji candle from July 15th, that level 69.90. That's the high right now. You got Starbucks trading out at 72.53. If it's got some volume behind the move, let me put this on a weekly chart out here, see what it's trading into. Trading into nothing. So I wonder if this is a real large A to B equals CD up. I'm looking at the April 20th candle, $62 even Steven out there. One of Basil's round number highs, and then it went ahead and moved lower. That had volume of 54 million shares out there. Let me just update my chart, make sure I've got the right volume. 54 million shares, and when that was taken out, it was taken out with 17 million. Oh, my goodness. So taken out with light volume. It's never had 54 million shares at any point in time on the way up here. So in the case of Starbucks, if in fact this thing ever does fall out of bed, it will come all the way back at least to that level, which would be $62. But this morning, that's not the story in Starbucks. I think it's got a little caffeine in its engines out there, because it is going to gap up and take out its highs. 877-927-6648. I'll take a double mocha latte choca something or other. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow down 74 points. Train out at 15,483. S&P off 8 at 1682. Composite down 18 at 3587. Russell 2000 down 8 at 1046. Google up 71 cents. Apple back $2. Microsoft down 4 ticks. Intel off 7. Cisco down 18. Leader in the clubhouse is Tesla Motors. Little energy in that stock, up 3% this morning. Trading out at 128.90 or so. Starbucks up $4. That's up 6%. Gilead Science, GILD, a great looking. I haven't looked at the stock chart in a while, but used to be a great looking stock chart. Maybe it still is. It's up 4% this morning, up $2 and change. Black & Decker, Stanley Black & Decker, SWK, must be out with earnings. They're up 2.5%. Principal Financial Group, PFG, up 4% this morning. To the downside, man, talk about psycho. Must be Expedia that's having some of the effect here on Priceline, PCLN. That's trading off $17 this morning, but really it's only down 2%. Not a big deal. Not like in the case of Expedia, down 22% off $14 and change right now. SolarWinds off 21%, down $9.50. How do you pronounce this one? ABAXIS. We'll just call it ABAX is the ticker symbol. That's trading down 15% here this morning. Amazon off $6, down 2%. Vertex Pharmaceuticals off 7%. Outer Wall, OUTR off 8%. Tempur Sealy, boy, it's got the wrong sleep number here. It's down 10% off $4 and change. Decker's Outdoor off about 8%. Netflix down 4%. Global Payments, GPN, off 6% this morning. Cirrus Logic, CRUS, off 11%. Apple down $1.52. So let's start taking a look at the. Let's go take a look at some of the other things here that are moving in the markets that we need to most certainly pay attention to. Let's go over to our friend. Let's go into the currency market to see what we have going on out here inside the currency market. What I've got first up on my screen is the U.S. dollar, Japanese yen. You got the Japanese yen getting weaker here. The U.S. dollar index getting stronger here this morning. I'm sorry, just the other way around. You've got the Japanese yen getting stronger, the U.S. dollar getting weaker. My apology there. And we can see that is U.S. dollar, Japanese yen right now trading out at 98.36. It is moving down. It's going to form a nice Gartley buy pattern right at the price point of about, I can't even see this here. What is it? About 96.73 out there. It's going to form a real nice Gartley buy. Now, it's got all the numbers. So just like we were drawing in advance the 3 drive to a top pattern on the IWM here, we're using the leading indicators A to B equals CD. We're using Fibonacci numbers. We're able to draw the Gartley. We're able to take a look at expansions of swing points, and it's a beauty on this one because you'd have a 0.618 retracement off of the low, not a hammer, but off of the low from June 13th, that low 93.77. Your high here is the swing point that came in on July 8th out at 101.52. That sets up your 2 anchors in order to be able to create your Fibonacci retracement level. So 0.618, because that's where a market is typically going to go back to, $96.73. Now, your B to a C swing point happens to be the low of July 11th. That's 98.23, and the high that comes in on July 18th out at 100.64. You take those 2 anchors, those 2 miniature anchors out there, and go ahead and calculate the difference, multiply that times 1.618, subtract that from your C point. That was, again, 100.64, and that's going to take you right down into that 96.73 area. So you've got a 0.618 retracement, a 1.618 expansion. You have everything you need. Now you just need to be patient, let price get down there, and then wait to see if the bulls come in. If the bulls come in, you get a bullish reversal signal. That is most likely setting up the next A to B equals CD up. We can even take a look at what that looks like here. We can draw that pattern in advance. That pattern would say that then the U.S. dollar, Japanese yen currency pair ought to make a little bit more than 100% move up into the 104.46 level, taking out the swing point high from May 22nd. So we've got everything set up. Now, the only thing we don't have set up is price, and then more importantly, the actual reversal signal. That is on the U.S. dollar, Japanese yen. Now, here's the real key. The real key is the euro. Not the euro. Where's I want the euro, Japanese yen. There we go, euro, Japanese yen. Here's the key, folks. This is the real key chart because this currency pair tracks the U.S. market better than anything else. And let me tell you, even though the market needs to bounce right now, it needs to work off that oversold condition. It most certainly does. But let me tell you, if this currency pair stays the way that it is, which is down towards its lows out here, this has got a 0.786 Gartley sell pattern. This has given us the signal. We got the bearish reversal signal here on July 22nd. Then we had a little test of that area, just testing to see how certain that it was ready to move down, and it most certainly is here today. This says the euro, Japanese yen. This is going to head down into the 127.90 level, and this is pointing the way for where the markets will go. Let's go to Maureen in Clearwater. Maureen, thanks for calling. Thanks for holding. How are you this morning?
Good morning, Steve. This is always wonderful in the morning to talk to you.
Oh, well, thank you. Good to hear your voice. Thanks for calling. You wanted to take a look at gold, the actual GOLD gold, or the ticker symbol GOLD?
No, the GLD, because it had a burst up, and so did the GDX, and now it's like fading. What's happening?
Are you in a position, looking to get in a position? Tell me what you're doing.
No, I was in a position, the other week, and everything went up, and all of a sudden it just died on the vine.
Well, if we take a look at the, now that's a good thing, okay, the diet on the vine, because really from a volume standpoint, in essence, that's what you're also looking at. So we've had gold here, which is off of the bottom, off of what is likely a historic bottom, and that's the low that came in on June 28th out at 1179, and it's had a nice move up. Now, when it's moved up here, what it was also running into, Maureen, is running into that April 16th supply line. That day there were 700,000 contracts that were traded here. And so it's a pretty significant overhead resistance area because it's come up into that level with like about 191,000 contracts, 134. So it needs to really work off that condition. So if you're not in a position, the ideal thing is that you'd actually see this pull back. Where would it pull back to? 1284 might be your first target. That would be your 0.382 retracement. Maybe even with a little bit of luck here, get down to 1244. But just going to have to play this one thing at a time. You see, it is still also over the bottom of that swing point, which is 1321.50. It's at 1324.30 right now. So it's actually holding up really well, but it's doing what it should do because it ran into that significant supply line. That's why volume is really so key out here. So I don't see it acting poorly. What I'd like to see it do is actually go ahead and pull back a bit and give another opportunity for an entry out here. So that's what it's doing. Does that help you to get a picture of what's going on with it?
Absolutely. I didn't realize there was the upside volume was so low. In other words, it's at a much lower level than it used to be. In other words.
What it's running into, what it's running into, just like when a stock falls out of bed, the very first place to look for where it's going to find support is where that high volume is. When a stock is going up, the very first place where you're going to see some significant resistance is where the volume is as well. So it has to work its way through that area and get some believers here. But quite frankly, knowing that it came up into that area and it's just kind of traveling sideways here, it's just like chiseling out there. So it's actually, in my opinion, the way that it's looking, it's actually behaving very well.
Very good. Thanks a lot, Steve. Have a wonderful day.
I will, and thanks so much for calling. Let's go to Don in Odessa. Don, thanks for calling. Thanks for holding. How are you this morning?
Good morning, Steve. I'm doing fine. Thank you for taking my call.
My pleasure. You wanted to take a look at the TLT. Are you in a long position?
I don't have a position yet. I'm looking at it as a possible island bottom today. My question is, for the let's see, that date 2 days ago, whatever that was, the 24th, the high of that day was 107.89 on my charts. I'm a little bit confused as to what an island is. So if we actually touch that high, have we negated the island bottom, or do we just have to close above it now?
Okay, so so it's a great question that Don is asking, and we're taking a look at the TLT chart. We're taking a look at the daily chart, and the very first thing that Don has spotted on this chart is the low of July 23rd. The low of July 23rd is 108.32, and then the following session, folks, what it does is it gaps down. The very high is 107.89. That's the number that Don is taking a look at, and this morning here the low is 108.02. So we've had a two-day sideways move here, and we've created this little island. And by an island, it means you originally had a gap down, which we did on as Don picked out on July 24th. And now today's gap up creates an island. But here's the problem with the island on the TLT, and that is that you have to really take a look at the underlying instrument. So right now, the answer to your question is yes, this is an island reversal. And if it were to get back and touch the 107.89, then it would not be. Then it would be negated. But the problem with using the TLT to identify your island reversal, you're really lacking the information, which is the actual contract itself. And so for that to be a real valid island reversal, in my opinion, you've always got to go to the underlying instrument, and we don't have that here inside the 30-year Treasury. Now, the TLT, I think it's a 20-year out there, but I'm sure if we go to the contract there, that we're not going to see that as an island reversal. Instead, from an island reversal standpoint, I'll just pull up the Qs for you. The Qs, the ETF, because there you've got 100 stocks, so it's more valid on something like that. If we take a look at the daily chart on the Qs, you've got a nice island reversal that came in somewhere, if I can find out. Here we go. If you go back, Don, and take a look at the time period of, you're going to look at May 31st, 2012, The bottom of that swing point is 61.50 now to that candle, 61.59. The very next day, gaps down, and the high is 61.32. Travels sideways for 3 days, and then boom, on June 6th, goes ahead and gaps up, and the bottom of that gap up was 61.52. Created a nice island reversal. So it's a little bit better here where you've got multiple instruments. Where those island reversals really are key are on daily charts for our daily, weekly charts, whatever it might be, for an actual stock, because then the stock itself, that is the island reversal out there. So it's always a matter of, okay, what's going on in the futures market, the underlying instruments out there. But for a stock itself, it is, and Priceline had one, for example. If we go ahead and we actually pull up Priceline, and it really doesn't matter what formed it, although it's always nice to know what formed those candles. Priceline had an island reversal back here on the trading sessions of May 20th and May 21st. So it gapped up from the May 17th area, and then it gapped back down on May 22nd out there. And for a stock like this, that's the high flyer, that's really one of the best performers out there, to have that island reversal was real significant. Now, that the day that occurred, I mentioned to folks that it was because of some kind of financing or something that they had done out here, but still was an island reversal. And it's also very important because when that island gets taken out very quickly, what it's also telling you, just like on that 3 drive to a top pattern, it's telling you that this has got a lot of momentum, because the island itself, which is about as bearish as you possibly can get, was taken out. And so that's actually, to me, that is a continuation pattern, and there's very few continuation candles out here. But if you get an island that's taken out in a short order, it's telling you there's really a lot of momentum. And you can see even in Priceline, that's the way that the stock chart has formed out there. So does that help you?
It certainly does. I do appreciate you taking the time to explain that to me.
Hey, my pleasure. And thanks so much for calling. Have a great weekend.
You too. Bye-bye.
Absolutely. Okay. So, folks, we were taking a look at the euro-yen, because that is certainly pointing a signal to a lower move. Now, if we go take a look at the euro-yen currency pair, let me find the shorter term. Let's go take a look and see what's going on inside the 30-minute chart out here. Assuming that I can find, I know where I want to take a look at it is right back here. I think I drew the pattern in right here on the euro-yen. Yeah, most certainly. This is a 120-minute chart that we're going to take a look at. Now, the euro-yen has been producing some incredible patterns out here. Gartley sell patterns, butterfly buy patterns. I mean, the whole kit and caboodle. So if you are trading currency pairs, you really want to be paying attention to this one, because this has produced some really great patterns. Well, the most recent pattern here was a 1.618 butterfly sell pattern. Came in here on the trading session at 9 o'clock in the morning. Again, it's a 120-minute chart that we're looking at. Came in at 9 o'clock in the morning on July 24th out there. Now, when you form this pattern here, and it got confirmation of it, the real confirmation in this thing took place on the 1500 hour, 3 o'clock in the afternoon on July 24th out there. Began its move down. Now, the very first move is always going to be that 0.382 area. That it most certainly has done. Let me go ahead and put up the relative strength indicator on this just so we can see. And you can see on the 120-minute chart, it's moved into the extreme oversold territory. So it's made its first move, which is coming off of the low, our low out here that's used for our anchor point, which is at 7 a.m. It looks like about 7 a.m. In the morning on July the 10th. Price level at 128.15, making its move all the way up to the high out here. And you can see as it also got up on the 120-minute chart into that 9 o'clock time frame, it moved where? Into an overbought territory. So right now it looks a bit extended to the downside here. Now, that is actually somewhat bullish for the market that had moved itself into an oversold territory. So you should expect to see the market bounce here at least for a while. Now, we haven't seen the the bulls exactly rush in on the Euro-Japanese yen here, but it's made its first move. It should begin to bounce. Look, I don't know if it's at 9:49 that it's going to begin to bounce here, but it should begin to bounce. Maybe it's not until Sunday, but we should see this thing bounce and then form really an A to B equals CD down, most likely forming its next pattern into the price level of probably 129, even Steven, somewhere right around there. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. Dow's off 79 points right now. The S&P is off 7, trading at 1683. Russell 2000 is down 7. NASDAQ Composite off 11. Leader in the clubhouse, leading the way down, is the New York Stock Exchange. Now, that's important. Right now, you've got net declining issues of 1182. A lot of time left in the trading session here today, but I'm going to give you the number, and the number is this. Write this down, 442. You get 442 net declining issues or more, And, man, you want to tighten up your stops because that will be the key that the ball has been fumbled and the Bulls or the Bears have taken over. So that's the number to be watching for, 442. If it's anything less than 442, the Bulls retain control of the ball at least over the weekend here. Now, that's the first thing to take a look at. Summation index, oscillator, all are positive and pointing higher out there, and that's why that number is so key right now. That's the first element. The second element, let's actually switch over and take a look at the VIX index here because that is going to be the second key here. And what we can see, the VIX index right now traveling out at 13.47, up about 4%, up about 50 cents. Now, if you're looking at it, if you're watching us on Tiger TV, you're taking a look at a trend line. You're taking a look at a number of things, but first really looking at the trend line coming off of the low from March 14th, $11.05, that low. The next low out here is going to be May 17th at $12.26. When you break a trend line, which is exactly what the VIX did here, and that was a rising bottoms trend line, when you break it, you try to get back inside. You try to get back on the side of that trend. And that has been, there's been two attempts. Today really being that third attempt out here. If it gets above that rising or the rising trend line there, that'll be your second signal. Now, if it does that, most assuredly, we will see more than 442 net declining issues inside the New York Stock Exchange out there. So that'll be your second confirmation that, okay, you know what, you actually could go into the close taking a short position, or you want to make sure that you really do tighten up your stops on the long. So what it is that we have that's going on right now on the intraday, well, it's nothing more than that EKG. If we go over and take a look at that 30-minute chart here, that's what we're going to use as our time frame to understand what's going on. What we can see here as we're coming on the air, as the market was moving down, you know, and you don't get this on any other financial channel that I know of, as the market was moving down at 9 o'clock, it was doing what it was supposed to, which was getting into an it was supposed to get into an oversold condition, but it was when it had confirmed the Gartley sell pattern that took place at 12:30 in the morning this morning here, and it moved down to where? To the 0.786 retracement level. And then what showed up here was a bullish engulfing, a bull sash type candle, really in this case here, because it's a futures market, it's one and the same. So you got that, and now what we're also getting is a little bit of confirmation here with 2 minutes and, about 40 seconds or so left before the next candle is complete. If you get a higher close, which is what we have just simply at the moment, then you'd have a second opinion out there. You would have a little bit higher close, and that sets up a bounce. That sets up a move. Now, where that move gets to, that's going to be key. The normal area for this move would be where? That's right, to the 0.68 retracement of the leg down. So you'd be going from the high that came in at 12:30, and that's at 1689, down to the low that came in as we were coming in on the 9 o'clock session, 1675, and the 0.618 retracement level is 1683.50, 1683.75. That's the first target for the bounce. If it gets up to that level and it has not achieved an overbought condition, well, then, by all goodness, it could actually move higher. It could get up to the 0.786 level, 1686, even 1690. But I don't believe we will see the ES Mini get above the 1690 level. If it does, though, boy, the Bulls were really able to overrun the Bears out there without any question. Folks, it is Fantastic Friday. I want you to have a great weekend, and always remember, you have an amazing power within yourself, and that power is so strong it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great weekend. Look forward to seeing you on Monday. Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.